Good day, guys. Good morning. Yeah, this is Bart speaking. Yeah, we have another session. I'll be tracking. I'll again go to DXY, the US dollar index. Last time we looked at it, and I was tracking its performance, the way it's used to perform, the way it was performing throughout the previous month. As you could see, we had the major break of structure, yeah, according to the last video that I posted. Yeah, so precisely you could see that the DXY has been bullish. Yeah, has been bullish. Yeah, you could see the momentum, the bullish momentum, the bullish break of structure. You could see the break of structure to the upside. Yeah, you can even see on weekly. Yeah, it's so clear. Mm. And okay, you can still see the series of higher highs and higher lows, higher highs and higher lows. So what I wanted to do here is to keep marking the major break of structure. So these are the trends that I managed to draw on a higher time frame. Let me go to daily. Maybe you can see them clearly. So this actually I'm trying to mark up the major break of structure. So today I just wanted to talk to point out a few things. How can we use the market price phases, yeah, to predict the movement of price. So price phases consists of four categories. So we have consolidation, that's the typical range. Expansion, that's when we experience a breakout from the range. And retracement, that's now we expect a short-term anti-trend move. Yes, that's the retracement. And also a reversal. A reversal is the continuation of the trend. It's a change of trend. Yeah. So basically, I just want to show to go through it on 4 hour on the same pair DXY. DXY, the way I trade. So I emphasize most of my students, my guys, that actually I analyze with, yeah, to follow a few things concerning the price phases. Price phases help us to be able to predict, yeah, the future price move. Yeah, because since now you've got to know what happens in consolidation, after consolidation, and also you've got to understand what could happen after expansion. Then it will be easy for you to track, to predict the movement of the price. Actually, price delivery would be so easy to be tracked. So basing on what we had here, our first phase was what we call the consolidation. A consolidation, typical. Let me just give you a nice definition for the consolidation. Consolidation is when a stock or an index, for example, this is a US dollar index, is when a stock or an index trades within a range. It trades within a range. As you could see, it has been buying at a support and selling at resistance. Still coming back to buy at a support. It's trapped into the range. This is just a typical range. This is consolidation. Yeah. So the trend is said to be sideways. Understand? Yeah, and may vary depending on the circumstances. So once the range is broken, it may lead to a bigger move. Once the range is broken, just like you see this arrow, once the range is broken, it can lead to the bigger move. A breakout from the range, it led to the bigger move, forming what we call the second phase of the price, which we call the expansion. Expansion happens when a price breaks out from the range. So that's expansion. We're talking about now the second range according to the arrow, yeah, that I've used. Then after that, before actually, wherever you see an expansion, there's what we call an order block, which has influenced that move. An order block is an institution candle which sponsored the all breakout, the all move. So basically, it could be the last red candle, the rush bearish candle, which sponsored the move. So it could be this one. This is the candle which sponsored the all move, leading to the breakout, the expansion phase. So afterwards, we're gonna expect what we call yeah, what we call retracement. But before we see price retracing back, remember when we have expansion in the price, when there's a massive breakout, there's what we call price inefficiency. Price is left actually unbalanced. Price inefficiency is literally called imbalance. Imbalance is when you don't see any participants. Uh, like you only see one side of the participants. Like here, you only see the buyers, and you here it's still imbalance is there. Even just like you see here, yeah, there's no balance of price. There are only buyers, only there are no sellers. There are no sellers. So yeah, to make it so simple for you to understand, yeah, imbalance is the same as price inefficiency, is the same as the liquidity void, yeah, which is left behind when expansion happens. So the retracement happens. This is the third move, the third price phase. This is the arrow. It happens in order so that that void, that price inefficiency, the imbalance has to be filled in order for the price to be balanced, to give both parties, the buyers and what, and the sellers, yeah, to have equal participation in the price. Understand? So it's the reason why you could see price has been now, after the expansion, after the breakout, price now kept on retracing back, and hopefully it's retracing back to areas of demand where now we're expecting now to make buy entries, to make long entries. So this is where I'm expecting now to make long entries. But as you know, once price keeps on like this is just a retracement, and retracement, it's just a short term move. So let me give you just a definition of a retrace. The meaning of retracement is a temporary reversal of a prevailing trend. So this is the prevailing trend. As you see, we've been bullish. This is a prevailing trend, as you see. So retracement is the temporary reversal. This arrow is what we call the temporary reversal of a prevailing trend. So that's what you know. Yes, it's the temporary reversal of a prevailing trend. Yes. It's a short-term period of movement actually. Yeah. Followed by a prevailing what? Trend. So this is a short-term period of movement, it's just a retracement. I would call it a complex pullback. Yeah. Because if you go on daily, you could see uh you could see the major break of structure that it's a typical retracement, unless it takes out the previous higher, a higher low, this one, then we could call it a trend reversal. But if it stops here, this order block holds, this daily order block holds the price, and when the this order block holds the price, still we're gonna see the trend continuing to buy. So I would say this would be a retracement, and I'm hoping for the trend to continue buying as actually price reaches the demand levels. So basically, that's what I want to talk about. Yeah, it's easy for you to track or to predict the price movement using the price phases. Yeah, basically you can see that. Yeah, because once you've noted that after a breakout, you would know that you would experience what we call the expansion, and that expansion will literally leave what we call imbalance, yeah, price inefficiency, of which the retracement has to happen in order to fill that price inefficiency, to fill that imbalance, yeah, before the trade continues. So that's what I wanted to talk about. Yes, so that's what actually I look at when I'm making my analysis, yeah, basically on each and every pair that I trade. So these are some of the pairs that I've been on, yeah, since the past weeks, and I've been really doing so well. I've been doing so well. So I think I'll end the video as for now. But all I want to talk about, the price phases, that's what I want to talk about, guys. Thank you so much. Yeah, have a blessed day. Ciao.